Case study, the 48-hour rescue. 48 hours, that's all the time this investor had before losing a $10,000 earnest money deposit on a property purchase. By the end of this video, you'll see the exact asset-first checklist we use to bypass the bank's bureaucracy and the specific terms we used to fund this deal while the local bank was still asking for tax returns. This is the finale of our 3-part bridge loan series. We've talked strategy, we've talked exits, now let's talk reality. Thursday afternoon, 2:15 p.m., a borrower calls me in a full-blown panic. His bank, after 6 weeks of processing, decided they didn't like something about his income history. This is the anatomy of a deal that was dead on the table until we performed the autopsy. The bank failed because they are checklist lenders. They needed a 2024 tax return that didn't even exist yet. We are asset lenders. First, we looked at the collateral, the property, a single-family home in a high-demand area of Missoula, Montana. Second, we looked at the skin in the game. The borrower was putting 30% down of his own money. Third, we looked at the proof. We verified comps in 1 hour. We didn't need his W-2. We needed to know what that property was worth. By Friday morning, we had a clear title commitment. If you've followed this whole series, you now know more about bridge lending than 90% of the population. Congratulations. Knowledge equals wealth. So subscribe now to catch our next series on forensic construction lending. And if you've got a deal like the one I'm describing, one that needs a human touch, not an AI chatbot, keep watching. So while the bank was still stuck on the borrower's income history, we were drafting loan documents so the borrower could close on that property. The next day, the borrower signed loan docs and our funds were wired. 48 business hours. He saved his earnest money deposit. He secured a property in Missoula, Montana with $40,000 in instant equity, and now it's rented and cash flowing. The cost of hard money was nothing compared to the cost of losing that deal. And it wasn't the $10K earnest money deposit. It was the potential equity loss of $40,000. So $50,000 he stood to lose. That is the math of certainty. This concludes our bridge loan series. Speed is a byproduct of expertise. If your lender is slow, it's because they don't understand the deal. And if you're tired of being treated like a number by banks and other lenders that don't get it, let's talk. Go to highwestlending.com and submit your deal for a forensic review.